In this video, we're going to look at how the S&P 500, the NASDAQ, the NYSE Composite, and the Russell 2000 tend to perform in the month of February. Coming into February, so I want to look at what's called seasonal statistics. That's how an asset performs at different times of the year. So the first one we're going to look at is SPY. That's the S&P 500 ETF, a very popular one. So what this number at the top of the column shows is how often the price moved higher during the month. So that number means 60%. So that means 12 out of the last 20 years. We're looking at 20 years of data here. So 12 out of those 20 years, it moved higher. So okay, but not great. You can see there's definitely some months that have a greater tendency to move up. We're kind of around the coin flip territory for the S&P 500 in February. And if you look down here, this is the average gain or loss for the month, taking the average returns of the last 20 years in February. And once again, you can see July, November, much higher average returns. February, near the low. It's not negative like it is in September and June, but we are kind of right near that break-even point. So historically, not a phenomenal month for the stock market. Let's go to QQQ. Sure you can still see that there. And we're going to set this once again to 20 years. We're going to knock out 2024 because February hasn't happened yet in 2024. So we're going from 2004 to 2023. So that's the last 20 completed Februaries. You can see that the percentage of time the QQQ rises in February is fairly low. Only 40% of the time. So 8 out of the last 20 years, it's moved up. 12 out of the last 20 years, it's dropped. But the average gain's still 0.2. So still slightly favorable, but more likely to move down. So history doesn't necessarily mean that it's going to repeat this year. It's just something that we can look at, provide some insights on how these assets have performed throughout the year. So this is how it's performed in February. Once again, you can see these other months have performed much better. July, one of the best, 3.5% average return, and 85% of the time it has moved higher over the last 20 years in February. Same with November, 75%, 2.3% average return. So those are really good months. And as we can see, it starts to pick up. March, April, May tend to be better months. February, a little bit of a down spot for the QQQ. Let's check out the NYSE Composite. Once again, we will set it for the last 20 years, excluding 2024. And we see that coin flip again for the NYSE Composite. The NYSE Composite is good because it includes loads of different stocks from all different industries, all different sizes. So very good indication of what kind of the average stock is doing in February. Sorry, try to keep these ads out of the way. And February, 50%. And average loss of 0.1%. So on average has been a little bit of a losing month over the last 20 years. You can see better months are April and July. Much higher chance of it moving up, or it has moved up more often in February during these months, and you also have the bigger returns. Final one, IWM, which is smaller cap stocks or smaller companies. those 20 years, the last 20 years, 2004 to 2023. So for the smaller cap stocks, a little bit better. You can see 65% of the time, so that'd be 13 out of the last 20 years, it's moved up in February. So better than all the other indices, and it also has the highest return of the indices. 0.6%, and again, comparatively somewhat similar to other months. We do have November, which is a bit of an outlier in that it's moved up 80% of the time and 2.9% average return. December also pretty good, July pretty good, but most of these months kind of around that 60% upside. Historically, the Russell 2000 or IWM has underperformed the S&P 500 and the NASDAQ, but as you can see here, possibility that it may outperform in February. That seems to be a time when it does tend to outperform. It's been lagging behind even this year so far in 2024. IWM is down on the year while the S&P is up almost 4%. So while this has historically been the tendency for the small caps to outperform a little bit in February, until we actually start to see some evidence of that, the S&P 500 and the NASDAQ do seem to be performing better, at least coming into this year. It's a bull market. The market has been rallying. We may get a pullback in February, which may align with these historical norms that we saw on the S&P 500 and the NASDAQ. But that just gives you a little bit of information on how stocks tend to perform throughout the year and in February.